Good afternoon, everyone, and welcome to another one of our sessions, our Industry Insights session. I'm glad to present today a very special speaker, Mr. Kamal Dadashov. He will be talking to describe the price volatility with a global impact on oil producing and non-oil producing countries. During his talk, he will tackle how adverse price movement will change the concept of the global economy. So for you to know a little bit about our today's speaker, Kamal is originally from Azerbaijan, but was educated in finance in Geneva Business School. He has over 13 years of professional experience in different fields of finance. He has developed himself in a manager in the oil and gas industry in SOCAR, the state oil company of the Republic of Azerbaijan, for over 8 years, specializing in financial modeling and management. The several past years have been spent learning how to work with perspectives and how to follow through with his work ethics in both teamwork and individual tasks, bringing the best results possible for the responsibilities he holds. He's also currently a visiting professor at Geneva Business School, introducing students in the oil and gas industry. It's a great honor and a pleasure to have you here today, Kamal. And I would like to ask the audience to type on the chat box where are you from, and if you are a student, an alumni, a prospective student, or staff, so our speaker of today can learn a little bit about you and have an idea of the demographics of the audience. So if you can take a few moments there, would be fantastic.
Okay, so thank you very much, Eduardo, for presenting me. I'm very glad to join today with a big audience. So normally we are, I'm just with limited audience. Today we have enough. I hope that we're from the diversify the spheres, and I'm glad to be with you. Thank you very much for once again. And as you introduced me today, I just want to deliver one point that I'm not able to say, unfortunately, the whole screen. And as Eduardo mentioned, you can put your questions in the chat box, or you can use the microphone at the end of the session. Was coming up, the questions will be interesting to you. I'm going to present today. We're going to have a special topic. We're going to talk about the global oil price, which is very vital and important. Like the topic that recently we started talk during the pandemic the period. So a little bit about me, as Eduardo mentioned, introduced me. I have a background in the finance. I used to work in different fields of finance, starting from the consulting, the BDO company. It's one of the biggest auditing company worldwide. I started my career as a consultant and advisory in the corporate finance. And the second, my job was I was a chief risk officer. It's an investment commercial bank. It's a Russian implemented. And the last my career was the line was a SOCAR. I started my career from the financial modeling, and then promoted to deputy general manager as a coordinating business optimization and modeling departments. Regarding my academic career, I started the bachelor degree from Azerbaijan State Economic University in finance based, and I got my master in Geneva Business School based in France, in Rouen, and I did my I am actually in the process of completing the MDO Business School as a MBA, International MBA. So today it's an honor to talk about from the global oil price. So the first, the idea is about what the general concept is oil. Oil is the world economy most important source of the energy, and therefore it's a critical economical growth. Its value is driven by demand for refined petroleum products, particularly in transportation the sector. So petroleum products, the power virtually is about all motor vehicles, the aircraft, it's a marine vessels and train around the globe. In total products, like the derived from the oil, such as the motor gasoline, the jet fuel, diesel fuel, and a heating oil, and it's approximately supplied 33% of the energy consumed by household, businesses, and manufacturers worldwide. So regarding the natural gas and coal supply, it's about 22% and 28% respectively from the world energy needs. So the principal activities, I think that somebody has put his microphone on, so I will kindly ask if you just turn it off. The principal activities involved in moving crude oil, which is the source to its ultimate consumer, is starting from production, which is involves the finding, extracting, and transportation of crude oil. It's about a refinery, the process of which crude oil is turned into products such as the gasoline and other the petrochemical products. And the last point is about the distribution and marketing, which is the focus on the moving was produced to final the consumer. So these activities actually occur with a global marketplace and extent of physical infrastructure that actually connects the buyers and the sellers worldwide. And then the international, of course, this is all supported by international financial market. The physical infrastructure encompasses the vast area of capital, which is also including the drilling rigs, the pipelines, the ports, the truck, crude oil storage facilities, refinery, product terminals, etc. The next point is about, I just want to came up this very 5 interesting facts can be lined about the crude oil. The crude oil is formed from just if you're going to go back to history, it's a form from animal and plant matter. And this is our scientists say it's originate from fossil fuel organic materials such as animal and plants, and oil was formed 3 million of years ago. And the second interesting fact is about the oil is used to create the multitude of products, the most of the products that we use in our normal lives, from including the plastic bottles, the paint, and the clothes, even in some foods also that comes from the crude oil. Regarding the world's largest oil field, this is located in the Middle East, with the Gawar field in Saudi Arabia. And production unit per barrel of day, it's about 5 million. Oil is a major source of energy, alongside it's coal and natural gas, and oil makes approximately 88% of world energy demands. And the last interesting point about the oil, it's the price of VTI futures expiring in May, applying the 321%, approximately minus $40 a barrel in the history. So that's about the interesting fact regarding the crude oil. The next point is about who is the global oil markets, how we actually distribute these sections. Among this, the 4 main the elements or the items that we can see it from screen. So who are they? They are the consumers. Consumers could be individuals. The individuals of the users, autos like the space heating. It could be transportation fleets like the old trucks, the shipping gear. It could be industrial uses like the most of industrial giants like chemical and plastic manufacturers, as power generation or electricity heating, the systems. Regarding the producers, who could be the producers? We divide these units for international oil companies. they are private. The companies like BP, Total, they are like more international companies. But also the national oil companies, government controlled or government owned companies like SOCAR or Gazprom, the companies was like controlled, owned by the government. And the next players, they are the traders, hedgers, speculators, and investors. The merchants, who is the firms facilitating exactly the physical trade, who is involved in physical trade activities. And definitely, we should also introduce about financial market participants, who they are. They are hedge funds, they are individuals, the trading advisories, they are pension funds, and of course, hedge users like the swaps dealers and servicing. It's about the servicing dealers and the banks and merchants. And then regarding the policymakers who could be included this part, they are demand side substitutes like governmental tax and regulations. And of course, we should mention about the OPEC quotas, which has the biggest access on the supply side, which we're going to talk a little bit later on, how we are as the biggest international organization has a huge impact on the formulation of the crude oil price. And definitely the last point is about market regulation. It's about the positioning limiting and in order to regulate the properly the market in this point. The historical oil price in this graph, what you can actually see, starting from 1970 and until 2010, we see this curve how actually changed because of several the huge events or the historical events that happened during 1970 and 2010, starting from the Iranian Revolution and the Arabic oil embargo. Iraq invades Kuwait. This is the Persian Gulf War, and also the OPEC cuts got the quotes in the 90s, the Asian financial crisis, of course the invention of Iraq 2003 4, and then hurricane of Katrina and Rita would happen close to 2010, and of course 2008 the financial crisis, which has impacted on the crude oil price, the volatility. So this is the one we are combining the several factors that can influence exactly the crude oil price, including political, environmental, economical, and other some aspects, and in fact, is crude oil volatility. And we are going back. We are now in the current time. So I just got this. The point is COVID-19 and then versus the oil price. And of course, if we're gonna go back a little bit, the one before, like on April 20, when the oil price made in history, when the U.S. benchmark contract notes VTI ended with the minus 37 of barrel, entering the negative territory for the first time. So the much was available, and then with the little demand from the global economy in lockdown, and barely any space left in the store, and when the producers and the traders had to pay the buyers and to take it off their hands. So having this kind of the negative nominal interest rate, we have now also seen negative price, the real commodity. And actually they are two impossible events taking the place what happened in the short time. And how actually this has happened, this is the question. So lockdown, the measures that put the place to contain and spread of COVID-19 and when produced a shock to global oil demand. And when the forecast and the drop in the global demand in April, which was about 29 million per barrel per day, around 30% of demand, followed by another significant year, approximately 26 million barrels. And that was the historical, actually, the world when they returned the old demand levels. That's actually last and recorded and seen in 19th. So as a result of unprecedented fall in demand, exactly all storage facilities in the US that have been filled up quickly, and what was expected, and they're rising at the average of 16 million of the barrels per week, and for 3 weeks, and automatically make the we expect that the price will go down when the oil glut is also evident in Cushing, Oklahoma, which is the major trading hub for U.S. crude oil, which is the oil traders from the United States. They started their futures market is delivered. So with total oil storage capacity approximately 80 million barrels, the Cushing approximately 20 million barrels when the storage is left. So the expectation of VTI future contract was settled the physical delivery of crude oil when the real world linked to one of the world's most heavily traded derivatives. But in 20th April, when the VTI hit towards the expired date, or expired in the May delivery, and the lack of available storages and capacity, so it caused a wave of panic among the traders who is holding the derivatives, the contracts for the May, found themselves unable to resell them. So this storage also booked and to get the crude oil delivered and point a specific of contracts. So it was a peculiar situation that the sent oil price the negative, dropping from the approximately the level about $18-19 barrel for historical minus like $37. But it didn't last for a long time because we were expecting this markets will recover slowly. What we actually seeing in the current time, and we're actually going to talk about in the current time, what's the major factors that boosting the oil price and soaring the price and the rising approximately the last 1 week. And then our one expectation, the price of the crash that resulted from the serious coincidences in the US oil market and doesn't necessarily represent the future market conditions. So having the minus 37 of barrel continued trade about like $20, and October VTI traders, they were about approximately $30. And however, this situation in 20 April, we were expecting will be repeated in the 19th of May, but fortunately, we didn't see these scenarios once in 19, which is already passed, because most of the economists and most of the traders, they were expecting that if most countries with a lockdown, they're going to keep this position for the June as well. So this will be continue, and they will trying to sell their June futures in 19th of May. But most of the economies they mention about reopening, but fortunately, the history did not repeat yet. And then the idea is also the point regarding this issue, when the free global storage capacity is currently estimated 600 million barrels, which could be used up to the June as well. For this reason, VTI Islam and Brent also experienced renewed downward pressure. Therefore, the railing after the President Trump, they threatening the military actions against Iran and the gambles in the Gulf, which was also impacted, increasing the for short period of the price. In order to prevent such of the scenarios, the world's top oil producers in OPEC and Plus Alliance, on 12th of April, pulled off historically to cut the global oil production approximately 10%, which is the process started from the 1st of May. And just months before this, Saudi Arabia, in response to the Russia refusal to join the cut oil production, the balancing effects of the pandemic on demand. So they agree for this process. And the companies, including the ConocoPhillips and Continental Resources, already said that they shut down 25-30% of their oil production, and all other U.S. producers will be forced to take the approximately same measures. So in February, they expected the drop in 2.9 million of the barrels stay end of the year. So result, the current situation will be changed at all. Partly regarding the capital expenditures. So as you know, the capex in terms of an upstream business, it's a measure and a very vital part of the production, which the production companies will also substantially will drop this for this year, because most of the oil companies, their break-even point, especially who's operating in the onshore, it is higher than the current prices. So this is actually the proper and the right decision on that terms, unless the markets will recover and the crude oil price will go up. And I just today saw the very interesting point, like the companies, guys like Schlumberger, from the pandemic, he lost 10 billion of the US dollars only for 3 months. And first estimates points about the 40% of spending reduction in the US and 20% reduction global compared to 2019. This is actually huge amounts was occurring like 2019. And all this could actually cause a significant imbalance in the medium term. And while the low prices are actually good news for consumers in short term, but necessarily it can be medium term as a price could spike. And to prevent enduring the damage in U.S. In oil industry, even the President Trump might seek to pursue the other measures, as bailing out American producers, trying to adjust the tariffs on foreign oil imports, and to filling up the storage capacity, or even the buying oil producers, and to leave the ground until the recovery. What about meanwhile, the OPEC and Alliance might try to scale up also on the production to follow the cut agreement process, which has been started from the 1st of May, and to desperate attempt to contribute rebalancing the markets. And that's it. The COVID-19 in that case is leading the collapse of all markets, which they will not able to return to normal, since the damage might long lasting, because we are expecting the couple of waves in second wave and third wave, what the scientists actually worrying about this issue. So it is hard to predict how long it will last and how will take the process in order to recover the whole economy and of course oil price. Regarding this point, who will lose when the price fall? The slumping oil price in the counts of celebration gasoline nations. So the average Americans approximately they burn 10 liters of the all oil products per in normal times. But all producing countries, the global like metropoles such as dropping the cost, could also face with disaster and hardship in millions. So actually, it's simple to see why is oil is referred in black gold when the price was riding high and all revenues to filled with the covers of the company and the government in the country. So now with the having like the oil, of course with this circumstance, which is uncertainty, when the price falls like 80 years low, with turmoil persists to record to deal with the cattle the products end of the price war. So the international agency previously warned that the countries like Ecuador, Nigeria, Iraq could be the worst hit, with their earnings that falls because they're 50% and a change between 85%, and was assuming the price will be around like the $30 per barrel in the short term. But now we see that the price is about the 30%, $30. So all the economists, of course, they are under the pressure with this circumstance, and the full accounts for 98% of Iraq's export earnings, games, precious metal, fruits, makes most of the rest. So the agency claims that Iraq's government will approximately face the 50 billions of in the spending the shortfall of the year in order for the paid it's like the civil servants, rendering the spending area, and of course including healthcare, and that this economy can face in the worst case. And how much the country spends on producing oil also declares about vulnerability. And when the country, Saudi Arabia, has one of the lowest bills for extracting oil, as the expert knows that lifting cost in Saudi that's cheaper. And of course, it depends on the commodity, which means to face when the funding shortfall will approximately 100 billion US dollars. And then, of course, in order to meet the gap or to cover the gap, it needs the oil price to be around 84 or 85 the barrel to another balance the governmental spending. And Saudi also accelerated oil price volatility by threatening to boost production to what happened recently, that somehow they punished Russia, which is the far less vulnerable to swing the price of the crude oil. When the President Trump promised to support the U.S. oil and gas industry, while the issue storage and distribution that the costs such as the volatility and impaction of the crude oil change, waste tax intermediate measure of price, and oil production makes the lesser proportion of the U.S. economy than the other nations. So having the kind of the lower price, it's somehow in the theory it's a bonus to drivers and the factories. So this is the good point for several countries who, of course, they import the crude oil and other petrochemical or refinery products in the economy, which is of course, is obtaining for low price. So typically, countries that are net users will stand to enjoy this boost. Like this is the low price, which is which is the most of the present, which gives the restriction and the government on restriction of movement and production. Regarding what does negative oil price will mean to countries, exporting countries, which is I enumerated here, like Russia, Saudi Arabia, Iraq, UAE, Qatar, and Kuwait, and Mexico, and Nigeria. I will talk a little bit now. And then, as I mentioned, West tax normative benchmark, when he promised like the U.S. crude price will be negative in the theory. What happened in the minus 37 per barrel in the history, producers could not give away like barrel of oil. So collapse of the price in pandemic was the Saudi and Russian price. The list the world top exporting countries facing uncharted recovery in order to pass the negative. So in order to return to sustainable price will require global economy to discipline the production and the regulation by OPEC and the major producers, non-OPEC countries as well. So the longer the price remain and the low price, the more capital-starved operations will be, as I mentioned, will be reduced. So the beginning, what will be challenging the period of industry as well. So demand has prevailed with the world economy shut down on the pandemic. And according to the International Energy Agency, these reports for the April, the countries US, Europe, India, China are turning away shipments because of the storage gluts. So exporters have a little choice to pay midstream in order to collect and to transport all companies, logistical companies, to take the commodity of their hands. So, and China approximately canceled 10 shipments from the Saudi for April and May. But OPEC countries like Nigeria, Angola, Iraq, as well Russia, not in the oil-producing cartel, are facing additional cancellation according to the Anadolu agency. What they are recently they mentioned regarding historical price volatilization when they ended was a slide, and the stability of entire oil industry when the crucial seized up the global economy and the central player in any recovery effort. So in this scenario, low oil demand with the supply glut from the oil expanded countries will increase their revenues and the margins to terminal large crude oil vessels. We are expecting in the quarter two, the summer period. In the fiscal break-even price for oil, the price, of course, is needed to balance the country's budget. So, especially the countries who are dependent on exporting like crude oil. So, low crude price it makes the trends to economic stability, and then spending the budget most of all producing countries and threats their national currency. We actually what we saw in 2015 financial crisis when the price of crude oil was also and down, And when it took the long time to recover in a certain level, approximately $60 or $70, and we saw the several countries independent the high with their budget, so they went for devaluation for the national currencies. So fiscal break-even oil price for leading Middle Eastern countries needed to balance their budgets are what we actually got for Saudi at $91, for Oman 82, for Qatar it's about 55, so Bahrain it's 96, Iraq it's about $60, Iran it's $195. Well, this is the what they actually recently Fitch ratings they declared. The countries like Africa, Algeria, in Africa, countries like Algeria needs about $109 per bottle. Libya requires 110. Nigeria needs 144, and Angola it needs 55 per bottle. This is the data what they recently IMF they provided for countries non-OPEC like Russia, Mexico, Kazakhstan. They have average barrel, which is the Brent crude oil price, approximately they respectively 42, 49, and 58 year balance for their budgets. So the oil exporting countries, industries in US and Canada and Norway, they respectively needs approximately 40, 48, 60, and 27 per bottle in order to survive. So regarding the US and Canada, it's still it's not a clear. So how much, how many like million of oil gas sector in the jobs in US, and approximately 60% of the total employment will disappear because of the falling price. And then the pandemic, of course, this destroyed the entire energy market. And then the actions like the Saudi Arabia and the Russia, it accelerated and put in difficult situation the markets when the energy companies, the approximately contributing like the 8% of US GDP and to 2.6 respectively. And then the countries like the Russia, the pandemic also triggered deep reduction demand from Russian largest economy customers like China and the European Union countries, when the cuts particularly painful for Russian on shipment nearly half of the total annual exports. So with approximately 124 billion of the sovereign wealth fund, with state-owned investment fund in Russia, claims can survive the price with the 25, what they recently they declared 25 and $30 per barrel for barrel. Like a country like the Saudi Arabia, oil industry accounts 70% of the earnings and half of the GDP. And this is the approximately 500 billion to sovereign funds of Saudi, which have with a cash right out and low price and sometime according to independent analysis. So Saudi Arabia experts, what they are saying that in order to come back needs a 40 per barrel. As a result, it's deal with Russia. With the oil in this certain level of price, they will take in somehow their total, they cover the loss with 40 billion annually from the revenues. And then the war between the price war between the Russia and Saudi, even government asked that they cut their budget approximately $30. Regarding some the countries like Nigeria with the low price put the brakes on Africa in fastest growing economy. So they're making up, it's 90% of the GDP, and they have their break-even point approximately $57 per barrel. And let's expect it for positive. So what we see in the last updates, the oil prices are rising. So what they are the major factors? They gives the economy, what's the makes them like to come back? The number of active oil rigs in the United States, they fell for 90 weeks in a row, and they fell approximately, it's the lowest level and more than 10 years. This is one of the first and important fact. And as I mentioned, the Cushing, Oklahoma U.S. oil storage and distribution center, so it's like stockpile shrink for the first time since the last February. And then the case was Iraq. Iraq also announced to suspend production one of its oil fields due to protest, what we see in the recently. And then the fourth point, it's about it's OPEC and coalition. They reduce production approximately 10 million barrels. So starting from the 1st of May, and then this is the beginning of this month. And of course, U.S. manufacturers also reacted quickly by reducing the production as well. And the fifth fact is about OPEC and coalition adheres to its commitments on the cutting down on the production. And the last point, well, we saw demand for oil starting freeze because of most of the countries start to reopening the economy, which was the main factor, and all we saw in somehow the waking process in the economy, like most of the European countries. We see this slowly. United States, they're opening, and then what we saw the reopening from China at the beginning of April. So before we go, before we ending up, I got very brilliant speech before when the pandemic started. The great interview. It's approximately 3 minutes by Warren Buffett, when he talks about how will this like pandemic issue will impact in the oil price, and what was the expectations and how the markets will react. So this is the small, approximately 3 minutes the video. I would like to introduce you.
It's had its worst day yesterday since 1990. Who are investor in the sector through this Occidental Petroleum deal from last year? You put in $10 billion, I think, and maybe some more after that. I know you get preferred dividends, but that investment has to be underwater at this point. What's your thinking?
Well, the 10 billion is the preferred stock that warrants it, and there is no market.
Okay.
It's a private. But we also have about 2% of the common stock. That's down significantly, and as I said when I did it, the biggest variable is the price of oil, and I don't know the price of oil, and every day it gets quoted. And today it's quoted at whatever it is. On WTI, I think it's $33 or something like that. And now it's going back into what they call contango, where the far out sells at a premium, where it was in backwardation when we did the deal, and far out was at a discount. But there's still, if you have an opinion on oil, you can buy or sell oil either 1 year out, or 2 years out, or 3 years out, or something of the sort. And when oil was in the 30s, there was a lot of agony in the oil patch, and the math just changes terrifically. It just doesn't pay to drill in a lot of areas. And the Saudis can turn out a lot of it. In fact, we know operating costs are, very, very, very cheap operators.
Between that war between the Saudis and the Russians, and then also perhaps the secular decline of demand given concerns about climate change. Is this really a great place to invest?
Well, I don't think the secular demand will change up. Certainly the immediate demand has changed. I mean, the airlines need less. People drive less if they're working out of their homes. And you change. I mean, you're talking about from 100 million barrels a day.
I think we got some technical problem, Eduardo. Can you hear me?
Yes, I can hear you. The things that I think that you have to turn off the mic you're using to talk and increase the volume in the screen that you're presenting the video.
Yeah, actually I did it the same way, but it didn't work. So I will share this link that people can see that later on. I think this is the technical issue because I did the same what you proposed, and unfortunately it didn't work.
Okay, don't worry about it.
So sorry for some technical issues, and that was my last point. So thank you very much for your attention, and I hope you guys they got like very useful points. What's actually is going on in the current market, what happened this last month, and what we are expecting. So if you got some questions, please go ahead. I'll be happy to answer your questions.
Anyone? A question or a comment? Well, I have a question, actually. Kamal, what do you think would be the most interesting opportunities for the future of oil and gas in a post-COVID era?
Post-Soviet countries, or I didn't get that.
In general, I mean, in the post-COVID COVID-19 era, what would you say are the main opportunities there for the sector?
This actually is a very good question, and most of the people they ask this question in generally. The honesty, it's a little bit hard to predict because we don't know how this pandemic issue will last. So for the period of pandemic, they definitely will see a lot of volatilities, unless most of economies will they open the economy totally. So when the vaccine will be found, when most of the economies, the big producers, they will reopen and will recover the back. For that case, the price will be in the certain level, very volatile, and then we will not see instability. But definitely the boosting the technology and innovations, so dependence on the crude oil, what we saw after the 2015, that the price enoughly went down what was like before the 2014, when was the price approximately $110. But the financial crisis changed the concept of the oil industry, which it's dropped down approximately $60 and $70. So that was the biggest message to all exporting countries, that dependence of the crude oil is getting down. So definitely after the post-pandemic, we will see this tendency as well. So developing the technology innovations, so the less dependence on the crude oil will not be the same level what we saw before the pandemic. So this is the dependence definitely will go down. For short period, it will be more volatile, but in long term, we will see some stability. But dependence on the crude oil will definitely go down.
Fantastic, Kamal. Thanks for that answer. While we move on to the next question on the chat box, we are publishing a form that we kindly ask everyone in the audience to please take a couple of minutes to fill it out. This is for attendance purposes and also to measure your level of satisfaction with today's session. So please feel free to take a moment while we move to the next question. And in another note, right after this session, in a couple of minutes, we are going to start our virtual workshop featured by our Career Day in Geneva campus. We have a very special coach called Verena Meinen, and she will be talking about prepare your career insights and career management. So I'm also going to put the link there for your convenience, because you're all invited. Even you, Kamal, if you want to stop by in our Career Day, it would be fantastic to have you there.
Yeah, definitely.
So, and now I'm going to move forward to and here's the link. I'm just putting the link for the Career Day. This is Career Day. Okay, the next question is from Feg, and he's asking, or she's asking, sorry for that. Do you think the oil price will increase more than $50 within the 2020? Feg is a he. Thanks.
Yeah. This is very precise, like the figure. So to what we actually general expert to say that we can expect this is price at the end of the year. We can expect, because with the certain the reasons what I actually enumerated recently, which is the soaring the price, when the OPEC and the coalitions they decided about cutting down the production, and somehow the Saudi and Russia they got the slight agreement about the adjustment of the price, and then definitely reopening the economies. So we are there is one important point as well. That's the most several huge airport companies, they mentioned that they are going to open their flights starting from the June months, and then some of the countries that declare about the opening the tourism, the countries like Iceland, Georgia, we are expecting the Turkey, and then probably what we actually heard is Spain also, the slightly open in Italy as well. So definitely demand for the jet fuel, in which the crude oil will increase, and this is the huge there will be an impaction so for increasing the crude oil price in the second quarter. And unless we face with with second wave, if the countries will decide to go for second quarantine confinement and the lockdown, we will see slowdown in economy, because most of productions in the countries will close down once again. But if this tendency, I don't want to believe on that. If the countries is gonna go, they will go for slightly. But if this is space, if we're gonna we'll find the vaccine at the end of the year, and these countries will open their like tourism perspectives, and their flight routes uh, will be recovered. So we definitely will see $50 end of say 2020.
Fantastic. Well, Kamal, thank you very much for this very interesting presentation. Very, very insightful, and I'm pretty sure that everyone will find it very useful, especially if anyone here is studying oil and gas management. So it's fantastic that we had this wonderful opportunity to have you here today. And to all of you, our wonderful audience, thank you very much for being here today. I hope you find all this information of great help. And remember, you are all invited to our Geneva Campus Career Day. It's happening in a few seconds. You have the link there. And also, please do not forget to fill your attendance and our satisfaction survey, also posted on the chat. Thank you again. Have a wonderful afternoon. And Kamal, you were fantastic.
Thank you very much, Eduardo, and thank you very much, all participants. I saw they're very diversified, we have participants from different countries, so I'm happy to see you all. And I have a LinkedIn, so you can find me from the Geneva Business Schools, like the per websites. If you got any questions, any issues you would like to share, please feel free to connect with me. So thank you very much once again. And muchas gracias.
Gracias. Thank you a lot. Have a wonderful day.
Thank you very much.